From your perspective, where are the biggest missed opportunities in revenue for treasury management when it comes to community banks and credit unions?
I think community banks, and this is well documented in a lot of articles over the past couple of years, are really starting to. I don't think they thought they could compete. I also don't think they thought their products were as valuable as maybe the larger banks, and so they didn't really invest in treasury management. But what we're seeing, as you know, Will and Sarah, is that community banks realize um, treasury management is an annuity business, right? It's the gift that can keep on giving. And the other thing is, when you look at recent surveys of community financial institutions, their top two priorities are non interest income and deposits. Guess what can be a big contributor to both of those? That's treasury management. But a lot of community banks have not maybe invested in it. So, there's a lot of missed opportunities. I would say the biggest missed opportunity I see is not investing value selling in the front line. They don't understand the value and what they really could get for the services. A wire is a wire. I don't care if you're at a large bank, or a small bank. ACH, it's ACH, right? You're still providing a great service, and there's value to that. The fraud prevention services, and what I find with a lot of community banks is if they're not investing in the value selling, the front line doesn't know it, and sometimes some leadership doesn't understand it, right?
Yeah.
But what happens is, when you have increased full account waves, that's a missed opportunity. You have a lot of line item waves. That's a missed opportunity where I'll charge you for your account maintenance, but I'll give you everything else for free. Because TM has been thought as a loss leader rather than a huge revenue generator for your non-interest income and deposits. Or they deeply discount it, right, to below cost if they know their costs, but they deeply discount it. So and they give them a great ECR rate. They're pulling all the levers, and so they're leaving a lot. Most community banks leave a lot of money on the table. That you don't have to charge as much as the large banks, but there is some value there. So I think that's the investment in value selling training for the front line, both RMs and if they have TM folks. The waves and discounts are missed opportunities. And then focusing on the products that actually have an impact on their clients' working capital. Those things that can accelerate your DSO, those things that can accelerate a company's DPO, those are, and maybe we'll talk about it later, but those products are really important to focus in on because they can generate revenue, because you can impact your client's bottom line and make sure they stay in business because you've accelerated their working capital.